Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello everyone, looking at SPY on the daily and weekly time frame. So another bullish start to the day, and then we dumped, but we recovered. So we have a bearish reversal spinning top candlestick after 4 big days to the upside, rejecting from the upper Bollinger Band daily resistance 2 days in a row. I expect the volume to continue to decline, and I expect the trading range to continue to decline as we reach a bit of an equilibrium after the big breakout. So we have the low as support, 215.22. The upper Bollinger Band, have to keep updating that because that is a key resistance level. Weekly time frame, bulls are very strong. SPX is over that 10-week moving average resistance. All moving averages back as support. And we're looking up at 2180. We topped out there. We broke that today, but obviously rejected from that level. So we're going to have to see a close above 2180. And the highest close we have ever seen on the S&P 500 is 2184.05. So we almost hit that level today. That just shows you how close we are to an all-time high on the S&P 500. Not far away at all. So there was a ton of volatility today, and we do expect more volatility tomorrow, but again, expecting that to shrink. Let's look at some clues as to how we could have known to be looking bullish. Well, we knew bearish once we lost this 100 period. Let's zoom out and get the pre-market. Look at this 100 period 5-minute support pre-market. Bounce, 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 bull move. As soon as we lost that level on increasing bear volume, that's the bear signal, and then we dumped significantly over the next half an hour. So there was downside to be had. The technology sector was absolutely crushed today. The biotech sector was holding up well again, but technology, we had some of these names down 5-6%. We had Amazon, Apple, Facebook, Google, everybody getting crushed. And SPY bounced and gave a really nice shopping opportunity on all of those names because they bounced with SPY and saw significant movement to the upside. So how could we know to be looking to the upside after such a scary dump? Well, number one, we know on the daily chart that the bulls were out yesterday in full force and they showed up with huge volume. That was no fluke. They have a lot of momentum to the upside because of that volume behind the move. Speaking of volume, look at this 5-minute chart. Look at the volume climax, the highest 5-minute candlestick volume of the day. It occurred right here. The first candlestick that the bulls showed up after the dump, a green Marubozu, highest volume that we had seen. That lets you know that there is bull momentum behind that move. The volume was very strong. Then we rejected from the 8-period exponential resistance, 25 minutes in a row. We formed a higher low, a potential bottom fishing play where you put your stop loss below the low of the day, 215.22. We bounced off 215.25, formed a higher low, and then we turned the 8-period into support, and that's when the uptrend started. Let's zoom back out, catch that whole move. So the double bottom essentially we're rejecting from the 20-period moving average resistance, forming a little bit of a bull flag, another leg to the upside on big bull volume, another pullback on decreasing bear volume, continuation, 200-period resistance, rejecting the price multiple times. We get over that. Higher lows, higher highs for 3 hours after the dump, and bull volume was higher than bear volume at all points once we got that signal, big volume, green Marubozu reversal candlestick. Did see a little bit of profit taking at the end of the day as we rejected from the daily upper Bollinger Band. Another indication, while we had this big bullish reversal, green Marubozu, we had the hourly chart forming a bullish reversal doji off the 20-period moving average. We then confirmed it and then saw another 2 hours of upside. There was no panic here, and that was because the consolidation low before heading to the upside yesterday afternoon was at 214.87. If we form a higher low at any point above 214.87, the hourly uptrend is very healthy and still intact. The low today, 215.22, bullish reversal candlestick. That's how we know to be buying that dip. So we'll see what tomorrow brings, expecting high volume, but nowhere near the past 2 days. It is a bank holiday as well. We need to factor that in. So I appreciate you watching and hope you have a fantastic night.